Unprecedented jump in global gold prices, causes and future prospects. In a scene unseen in markets for many years, the global price of gold recorded an unprecedented historical jump, surpassing the $4,625 per ounce mark. This shocking level has returned gold to the forefront of the global economic landscape, raising questions. Why has gold risen so sharply? Are we witnessing the beginning of a new upward trend, or merely a temporary peak? This rise was not random, nor did it come out of nowhere. Rather, it is the result of a confluence of economic, political, and financial factors that converged simultaneously, driving investors worldwide to seek safety, and gold was the first destination. The first of these reasons is the escalation of global geopolitical tensions. The world is experiencing a state of instability, whether due to international conflicts or political and economic crises in a number of influential countries. In such an environment, investors lose confidence in high-risk assets and turn directly to gold, considered the historical safe haven and store of value that has withstood crises, wars, and financial collapses. The second, and perhaps more important, reason is the expectation of a U.S. interest rate cut. When markets begin to anticipate a rate cut, the appeal of the dollar and bonds diminishes because their returns become lower, while demand for gold increases. Gold is not tied to a fixed return but directly benefits from a weaker dollar and a lower opportunity cost. Global tensions and conflicts. Tensions in regions like Iran, political crises, the situation in Venezuela and the United States, escalating rhetoric from U.S. President Trump, the intensifying Russian-Ukrainian war, U.S. ambitions to annex Greenland, and the escalating tensions between China and Taiwan are all contributing to a strong rise in gold prices. Global and economic conflicts in several countries have led investors to flee high-risk assets and seek refuge in gold, driving prices upward. Some optimistic scenarios predict gold could reach levels approaching $5,000 per ounce in the near future, provided the current supportive conditions persist. Other scenarios anticipate temporary price corrections, a natural occurrence in any strong upward trend, without necessarily signifying the end of the medium to long-term upward trend. In conclusion, what we are witnessing today is not merely a fleeting surge, but a direct reflection of a turbulent global situation that has restored gold to its true role as a hedge against inflation and a safe haven in times of uncertainty. Those who own gold today understand that they are not merely holding a commodity, but rather a source of value and financial security in a world where equations are changing at an unprecedented pace. The rise in the global price of an ounce to this level is the result of a confluence of factors: political tensions and market volatility, the weakness of the U.S. dollar, expectations of U.S. interest rate cuts, increased central bank purchases, and rising demand as a hedge against inflation. This historic level reflects a shift in the behavior of global investors towards safety and stability, placing gold in a strong position as an asset that preserves value during periods of economic and political uncertainty. My advice regarding gold: gold remains a strong asset for preserving value in the medium and long term, but it is not advisable to rush into buying during sharp price increases. If you already owe